Hello everyone, my name is Radovan Vojtko, I'm CEO and Head of Research at Quantpedia, and thank you very much to Michał because I have a guest here. So we have an interesting discussion with my guest, Michał Zaremba. I give you the word to make some introduction and then we will start. So tell us something about yourself.
You can call me Michael, by the way. It is much easier for many people. Michał,
Okay.
how it is, okay? I am systematic trader from Poland, by the way. I started trading over 9 years ago, and I have been doing it full time for over 6 years now. My main focus is on US stocks and ETFs, and today my trading is fully automated. I trade around 15 to 20 trading systems at the same time. Many of those systems are stock picker type, means that they can trade even hundreds or thousands scan stocks, and they look for the best candidates, opportunities inside large universes like S&P 500 or Russells. I trade different types of strategies, from mean reversion, breakout, trend following, gap, momentum, and seasonality. And this is the topic of our discussion today. Then I hope it will be very interesting.
Unlock the power of Quantpedia Pro with over 900 premium strategies extracted from 100,000 research papers and more than 30 quant reports. Model full portfolios, generate real-time reports and save hours of work. Quantpedia Pro, your edge in quantitative investing.
I like the seasonality topic because it's one of my favorites, I have to say, because there are a lot of the people who, I would say, do not know about seasonality, and there are other people who like to look on the seasonality from the top. So it means, seasonality, what's interesting there, what edge you can get from the seasonality. So I really like that we can have a discussion about that. I also like that you are multi-strategy manager. So it means that you see the added value of running multiple strategies that are uncorrelated to each other, because it's the way how the real quant portfolio should be built, so it should not be built on just one system. But let's get to the seasonality. So what do you think about it? Is there edge? Is there not an edge? What kind of edge, and how to approach the seasonality?
Yeah, good point. I have started trading seasonality over 5 years ago. And at the beginning it was purely discretionary trading, and so far we executed, because we are working together with my wife, by the way, in a small team, and we executed over 500 trades during this period, and in general seasonality is working in my experience. The seasonality is working. We achieved quite good results in this period, over 70% win rate, and in general 1-to-1 average win average loss ratio. This is quite good, but it is going very slowly. Normally I'm working on, let's say, faster way. For example, mean reversion is about 1 to 5 days on average.
Yes.
Mean reversion strategies, of course, long-term trend following, momentum. This is another, let's say, type of style. But I like to combine edges. I like to combine different styles, as you mentioned. But we observed that seasonality does not work always the same way. And with every method is the same story, that we have better and worse periods. And the same story is about the year of seasonality. But I had always the fundamental questions about seasonality, because I'm automated trader. I trust data, and I know that the seasonality, let's say, data is weak from my perspective. It's weak because we have very little number of data points. I always wanted to measure this, let's say, seasonal width. I had good observation about seasonality. Sometimes it is crazy, because you can see, for example, that the pattern is starting and few days after it is shooting like crazy. But I always wanted to check it on massive scale, not on single let's say, cherry picks. And it was my goal, and we did it. We did it in December, in last 2025. I'm more than happy to share with you some of insights from my research, because we did really massive research.
Definitely. So let's go into it, and I'm curious.
Yes, okay, great. I will share my presentation. Please confirm that you can see.
Yeah, I
what
can
we
see
have.
it. I can see it.
Yes, the main goal was simple because I wanted to check if the seasonality pattern is something looking on the chart good, but we didn't know if those patterns will survive during out of sample periods, not only the in sample we see. And the problem with seasonality is that it is going very slowly. Okay, you can check, for example, you can take today 20 patterns, for example, and you can check if those patterns will work or not the next year or after this window. And this is going very slowly, and that's why we tested over 1,300 current and former S&P 500 stocks using almost 30 years of data, and we used walk forward method to do it. Just to tell our listeners what is seasonality in general, we can see SeasonX. I use SeasonX to visualize the seasonal patterns. There are very interesting tools and charts to this. And this is, for example, Microsoft pattern, by the way, starting now. Well-known pattern. What is seasonality in general? We have some price pattern at specific time of the year. It is based on behavior of the price, of course, and data behind. The seasonality chart is helping us to define such windows when we can trade this pattern and with higher probability of making money than losing money. That's it. Okay.
Yeah.
And for example, for Microsoft, you see this pattern here is an uptrend,
From
last
April.
10 years of data,
Yeah.
and this is downtrend. Okay. But what
Yeah, so
are the
from-
problems?
Sorry, so what does it mean is that from April to July, there is higher probability that the price of the Microsoft will go up for some reasons underlying.
Yes, for
whatever.
some reasons. For some reasons,
Yeah.
sometimes, of course, the best way is to have the reason behind and to go with the reason, of course. And sometimes it is doable, sometimes it is not doable. But I see and I know many such patterns. But what is the problem here? The problem is that if you will test, for example, let's say 25 years, this pattern will look differently, okay? And if you will check, for example, 40 years, it is not the best pattern maybe, and you see, depending on what you pick, you will get this, let's say, answer. But at the same time, I had very good experience with seasonality, by the way. I know that something was behind those seasonal patterns, but it was not clear because we have, for example, in this case, we have 10 data points, okay? Let's say 10 years of data, it is nothing from my perspective. I have strategies tested on 100,000 trades, okay? If you take, for example, stock picker strategy, you can test it on entire universe for last 30 years if the strategy is trading frequently. Then you have a massive number of trades to confirm that your pattern is, for example, working or not working. And in this case, it was always for me the question, is it worth trust? We see something, but I need to have numbers to prove it, okay? And this is the whole case of our, let's say, research. My doubts is the limited number of data points we have. There is an overfitting risk that nice looking pattern may be just a history, some noise, and we didn't know exactly. We had some, let's say, track record, but we didn't know exactly what was the seasonality wind behind, how strong it was. Okay, and my idea was, let's use technology we know, and let's do out of sample test to check it. Course. And what is the in sample, out of sample? Very short explanation. This is another company, Abbott Laboratory. Let's assume we have a time machine and we can go back into 2016, for example. Okay, in this case, this period, 20 years, this pattern was tested on last 20 years. We call it in sample period. And next, we are testing the same pattern, exact same settings, in 2017, for example. And in this case, we can say we recorded loss here, okay? This was loss in the next year. Then we had some observation period, and out of sample is our testing period. And what we did on a massive scale, we recorded those, let's say, losses and winners on all stocks, not cherry picking, not this one pattern. We recorded everything in US stocks in terms of current and past S&P 500 constituents. And what data and tools we used, it was about 1,300 stocks in between, data from 1995 to 2025 to the end of the year. We picked only patterns longer than 30 days and shorter than 90 days. And we tested separately quarters in terms of pattern start. Patterns started in quarter 1, quarter 2, quarter 3 and 4. And we used Strategy Quant. This is the software I'm using on daily basis for such tests. And we used a new very interesting feature, sequential ticker by ticker optimization, that we tested ticker by ticker these patterns. And we had 4 studies, 4 different studies with different settings. And we also, of course, use some data quality filters at the end. And the scale of the study was over 60 million optimization per study. A lot of optimization, I can tell you. Okay. Do you have any questions here, maybe?
I will have some questions at the end, but so far I will let you continue, and I have few questions.
Okay, but feel free to stop me, because sometimes it's complex or something like that.
That's fine.
And we used one of great method to do such work. It's walk forward, well known for strategy testing and robustness testing. And there are few methods to do it, but used also rolling, called floating. And I will focus on this method, because this is, let's say, the best. I'm using it on daily basis now to explore such patterns. Okay, and in this method, of course, we have some in-sample period. We are training the data, and we are testing the next year. And in our case, it was always test on the next year.
How long was the in-sample period?
We had 4 different, let's say, tests. And it was from 10 to 20 years, the training period, and always 1 year was the test.
Always 1 year testing period, and from 15 to 20 years on the trading period.
Yes. But the first conclusion is that longer is better, by the way. But I will show some details in a while, okay? And it was very simple, let's say, strategy tester we used, because we optimized on the 3 parameters, okay? One was the month, the second was a day, and exit after bars was the third one. And to illustrate you on this example, for example, this is 20 years period, and this is exact setting. This is a settings from Strategy Quant, and this is just to illustrate that we have exactly the same results. For example, Strategy Quant is optimizing the data and is giving us the answer that the best pattern starting in this quarter was this one, and we had the same settings in Strategy Quant found by optimization, like we can spot using SeasonX here. Okay, and the same story is about out of sample. This is this column, out of sample profit. Strategy Quant was recording these profits and losses. And this is the, let's say, screenshot from Strategy Quant, how we recorded those results. Okay, and the main question is, what are the results? And are you curious about the results?
Oh, definitely.
Okay. And this is the, let's say, magic number for me, and I will explain what does it mean, the magic number. But first of all, we need to have some benchmark to say, okay, it is good or not good.
Yes, definitely.
And we picked RSP equal weight S&P 500 ETF. Why not SPY? Because SPY is cap weighted. Okay.
Yes.
And definitely we need to have something, because it was on the massive scale, all stock, same weighted. Then we had this RSP. And RSP in general is delivering 10% CAGR on annual basis. And this is the results on different quarters. And this is the results, this column is the results of seasonality out of sample, pure out of sample. We analyzed all the data to have the same comparison. And what can I say based on that? In general, I can tell you it surprised me positively. Maybe some of, let's say, SeasonX users can say, okay, I expected 50% return, but we know together it is not doable this way. This is just wind behind, okay? And as we know, stocks in general have the long bias, And this is something you can add. In my research, this is the edge we can expect
alpha.
in general. This is alpha from seasonality, average alpha. Okay, we can talk how to improve the alphas maybe. This is average alpha, and I can tell you it really surprised me. And the alpha is stronger in Q2 and Q3, and as you see,
this is more surprising for me, because I mean, yes, because what I saw in the research, I would interject maybe here. So what I saw in the research regarding the seasonal patterns is that they are mostly connected to how the companies report their cash flow. There are companies that have different cash flows at different time of the year, and some of the quarters may have a higher cash flow or reported cash flow. The people who are not aware of that seasonal effect in the cash flow, they tend to not use that information in the pricing of the stocks, so there is inefficiency from that cash flow timing. This is one of the most often reasons that are from the academic research why those seasonal effects exist in the individual stocks. But what is surprising for me is that in a Q2 and 3, which is a surprise for me.
This is the data, okay? This is not an academic research.
I
okay?
understand.
I'm a trader, and I did it for my personal purposes. But we did a lot of work, and we checked. I can prove every trade in this study.
Yeah.
But at the same time, if somebody can, let's say, help us to do it better, I'm not focusing because I'm focusing on trading. I'm focusing. This is my, let's say, basic stuff to say, okay, I can move forward and I can build something on top of that. I like staking the edges.
So the alpha is there. For me, it's surprising that it's Q2 or 3.
For me, yes.
Yeah, I would expect towards the end of the year or beginning of the year, not in the middle. But I will look it out why it is, because maybe I do not remember something from the research. So why it's Q2 and 3. But let's continue.
The most, let's say, known pattern is sell in May and go away.
Yes.
And for me, from my observations in last years, I can tell you, and maybe let's show it to people also. Let's take S&P 500, for example. This is S&P 500. And let's say 25 years or longer. And what I see here, and this is, by the way, this is the trended view, the trended. And for example, here in last years, you can spot in the summer, exactly in this period, you can spot, for example, that from June to July in general, July is a very strong month. It was not always true, but in last years, this pattern, average pattern, I'm trading it very successfully in last years. And I can tell you this is something I can spot here. Of course, the Q4 is beating everything, But at the same time, you have shorter patterns, for example, this one and this one. They're also very strong. In my experience, really nice patterns. We are having plenty of signals in this period. But going back to the presentations and results, yes, it was surprising for me too. But I can say it is 50%, let's say, more than what you can expect from stocks. This is something, for me, worth considering, let's say. Because I am a practical guy, Of course, we did plenty of trades started from, let's say, discretionary. We took those seasonality windows and we traded some patterns by hand, let's say, manually in the first part of our journey. Then we had automation and we automated such patterns, such single patterns. For example, there is some pattern on Coca-Cola, there is pattern on Microsoft, on other stocks, and we automated such patterns. But at the end of the day, when I started trading on a massive scale, different trading styles, I discovered that it could be automated. And we talked with our, let's say, technological partners, and I organized those meetings between SeasonX and AlgoCloud. AlgoCloud is the trading platform I'm using on a daily basis for my trading. And we discussed how can we connect those technologies. The teams were very open to cooperate. And we did it. I can tell you we did it. What we did, the SeasonX have an excellent, let's say, screener to scan such patterns. And you can, for example, pick the market, you can pick a starting date, examination period, time period of this pattern, and you can filter, for example, win rate above 70% or something like that. And you will have the stocks from this universe, they are meeting those criteria. And at the same time, I'm working on Algo Cloud, and we connected the SeasonX technology to Algo Cloud technology. In Algo Cloud, there is some excellent feature you can define for every strategy you are trading. You can define the universe, let's say. Okay? You can define that it will be S&P 500 universe. You can define that it will be those 10 ETFs universe for some strategy. This is the way we used, but we added the dynamic group. Dynamic group, it means that it is taking all the stocks scanned by SeasonX and it is putting those stocks dynamically on daily basis, exchanging the list, for example, for this. And based on that, you can build the dynamic stock group and you can build any strategy, mean reversion, breakout, or even longer term trend following strategies to take the advantage of this seasonality inside your strategy. And this is the way we build this solution to automate it. Okay?
So it's overlay. So you can overlay signals with a seasonal filter. Stacked edges, exactly. You can stacked edges, yeah.
And this was a general idea, and everybody, by the way, everybody can test it because SeasonX, it is still valid. SeasonX is delivering this service for free for every Algo Cloud user now. It is, let's say, the beta period, and we have extended beta now. Then you can test it by yourself. Maybe a few words. What is Algo Cloud also to our listeners? Algo Cloud is connected also to Strategy Quant. In Strategy Quant, you can create the strategy, but you don't need to have Strategy Quant to create your strategy. You can code them no code inside Algo Cloud also. You can connect your broker. You have built-in data. This is very important part because data are expensive in general, but you have built-in historical and live data inside the platform. You can backtest on entire stock universe or single asset. Of course, you can take the backtest on single ETF or stock, or use the stock picker mode. They are also powerful links. You can use not only end of day data, but in general the platform is focused on daily data. No intraday trading here, but we can use intraday timing for enter and exit the daily time frame signals. And there is a strategy quant integration, and of course there's the now connection to the SeasonX ad screener. Okay, and in this platform, this is my, let's say, workflow. I'm working on daily basis about seasonality. You can build simple seasonal pattern and automate, of course, the execution of this pattern. You can combine technicals and seasonal together in one single strategy. But the most powerful mode now is this, that you can take a strategy, backtest the strategy in general or all S&P 500 stocks, and then you can improve this strategy using this edge. By the way, we cannot back this edge. This is the problem because it is not doable technologically to do the right backtest now. I don't know the answer how to do it, but it was the question. It will work in the future based on our study and on this functionality. And I have first answers, but maybe also a few. Do you have questions? Because it is not so obvious for many people what is the stock picker strategy in general.
Yeah, if you can go through it.
Yeah, because the stock picker strategy in general is, we are used to use, for example, single asset strategy. There's some pattern, and momentum is a great, let's say, example of it. You are using, let's say, simple formulas, for example, some breakout and trading stop, but at the same time, you need to pick from the whole universe the best of the best, for example. The same story is about ETFs, the same story is about stocks. Yes. You need to pick, for example, from 500 stocks, 10 the best, or from 20 ETFs, you need to pick 5 the best, okay? And this is the very simple and automatic way to do it. You have some rules. For example, in this case, this is mean reversion strategy, or it would be momentum strategy, and they are pure technical rules, breakout, reversal, and at the same time, this strategy is trading on group of assets, but you can define this position score and max open position limit. This is, for example, in this ETF case, it should be, for example, 5 The maximum top five, okay? And in stocks it could be max 10, okay? This is your risk limit, your exposure limit, and so on. At the same time, you need to define your position score, and position score is the ranking method, how to rank the stocks and how to pick those top five. And what is very nice in Algo Cloud, in strategy quant in this mode also, that you can backtest on current and historical index constituents. And this is really very important part, because many of people are backtesting on, let's say, Nvidia, Microsoft, and Coca-Cola now. They're not taking into consideration that the history had a lot of losers at the same time. And we see only winners, okay? This is survivorship bias.
Yeah, survivorship. Yeah, the current S&P 500 is not the S&P 500 which was 10 years ago.
Yes, yes. And in this backtest, in the survivorship bias problem is resolved, and we are testing on current and historical index constituents, and this is really important. And by the way, the tip for me, the stock picker strategy is much more robust, because we are testing on very large universe, very long time, because we have backtesting data since, let's say, 90s, and this is the robust way, much more robust way than single asset trading. And this is my screenshot, by the way, from yesterday, because very slowly we started testing this concept, combining SeasonX and Algo Cloud together as an additional layer. I know there is an edge from my research, but how this research will improve or not improve my real strategies, I started testing them from January. And this is, let's say, my first impressions. We will wait definitely for more data during this next months, years. But what I can share with you, I have two strategies. They are from the beginning. They are fast trading mean reversion strategies, by the way. Triple B, this is the strategy's name. Triple B and Volta, my strategies. I'm trading on daily basis. And we have two modes. The same strategy is trading with seasonality wind and without seasonality wind. And the same story is here. The seasonality is on and the seasonality is off. And I compared the data yesterday based on over 3 months of experience so far, and what I can say based on that. For example, win rate. And in general, it was not easy period for those strategies because we had, let's say, war in behind, and those strategies are very frequently trading. In general, they are having about 65 to 70% win rate, and this period was worse as expected. But I can see now that the seasonality on, in terms of win rate, in this period delivered much higher win rate in this case, okay? Win rate 10% higher in seasonality on. Whoa, it was really surprising for me. And also higher win rate in this case. Lower number of trades, and this is something natural because we are filtering, we are not taking S&P 500 stocks, we are only filtering to stocks they are having patterns now.
Yes.
Right? And in this case, it was about 100 trades so far, and 25 or more percent less than without this filter. Payout ratio in this case was lower than average win versus average loss. And the results were worse in this case, but the risk profile was better. But in this case, it was a different story because this strategy was losing money in this period, a very volatile period. And with the seasonality filter, it was making money. And this was a very small portfolio of those two strategies. I launched these two strategies in January. I have most of my data in this period I can share now. But we will definitely will check it on more strategies now. And I deployed those technique, many of my strategies now, because I trust there is something behind, okay? We can see it on very basic numbers now, but definitely we can meet year after and we can check it together what will be the numbers then.
And it will be interesting because it will be out of sample, so it will be like...
Yes, this is pure out of sample, pure on off, just like that. The same strategies, the same data, the same signals, but filtered to only the signals with seasonality on or off.
Yeah, it looks interesting. I have a few questions. So first one is, will you have a paper about this?
No. But feel free to write something. Yeah. But to be honest, this is for my purposes and trading purposes.
I understand that you are a practitioner, But it's like
Yes.
interesting, so I would love to have it in a paper form. But it's just because we in Quantpedia, we are what we are. So
Maybe someone from the, let's say, academic environment. I know you have plenty of users from this space. You're specializing in this space. By the way, I like the idea of scanning the papers and extracting the strategy ideas from it. Great, by the way. And this is something I discovered, and I'm sharing with you how you can use it on daily basis. Because from my perspective, it was the problem with seasonality in the first years, because it was time consuming. Okay, if you will pick few patterns in the year, this is not time consuming, it's very easy. But if you like to do it on the, let's say, more professional way, you need to scan all the patterns. We had the tools we developed to do it, let's say, properly, to pick the best patterns and so on. And this way you can trade really autonomously. Okay, you can trade automatically what you want. Okay, you can take some idea. You can even now the Algo Cloud have AI assistant. It can code the strategy for you if you feel not comfortable with very basic blocks. To use very basic blocks, the AI assistant can do it for you. And then you can backtest the idea. You can see if the idea is nice or not nice for you onto historical data. Then you can add this layer, for example, as an additional layer, additional filter. Lower exposure, but better results, as we can see here.
Here I have a question. As a practitioner of seasonality trading, what do you think are the strategy styles that profit the most from that seasonality overlay? I research a lot of seasonality trading and use it as overlay. But in your experience, what are the types? Because there are a lot of the styles, as you said, you can trade momentum, you can trade reversal patterns, you can trade some, I don't know, stat ARP, whatever. So there are like a lot of the styles. But which styles are the best for combining with the
I don't know. The answer is I don't know yet.
You don't know yet. You don't know yet.
Because
That's a good answer. I like it.
Yes, this very fresh technology. By the way, for example, Larry Williams, many years ago, talked about this filter, seasonality filter. It is something he used in his trading. He stacked the edges also. But on a massive scale, okay, you could pick, for example, this pattern Coca-Cola and take some manual trade based on that, for example, with some breakout. But if you are automated, if you like the automation, if you like to have more time for you, not staring at charts, then you need to automate. Okay, and for me, as an automated trader, it is not technology available for retail traders like you and me to do such things. I strongly believe that the big hedge funds have such technology in-house to stack such edges.
Definitely.
For us, it was not available. I don't know any technology. And from January, it is available. It is available now. You can take this edge, you can add to your another edge of your strategy. My first thought was that we need to have short-term trading strategies to exploit such edges. For me, the short means few days, and few days it is mean reversion. Okay, that's why I picked very frequent trading mean reversion strategies as the first step. But I believe that this edge could be exploited also in breakout. But breakouts in stocks, in general, this is not a breakout, intraday breakout. They are not trading few days. In general, my experience is that we need to have the breakout and have time or profit target or stop loss 10-20%, not
So it's like swing trading.
Yes, more than swing trading, and I believe that swing trading is also suitable. You can define the pattern length. In this screener, you can say, okay, I will take only the pattern they will have the length of next 30 days, 60 days, is up to you, okay? Then you can adjust this screener, and you can, by the way, you can create many such groups and adjust those groups to your needs, to needs of your strategy. For example, I believe, why not, that, for example, we can have also long-term trend following strategies starting in this period. Why not? Definitely in next years, because I see there is something working now, it is making money, and I like if something is making money for me, then definitely I will add this edge to another strategies. And by the way, I will do it the same way. I will have the same strategy with and without.
Compare.
And during the time, I can compare what is the difference.
Yeah, compare and see the statistics, and you can compare whether the seasonal filter makes sense or doesn't make sense for this case. Yeah, definitely it really makes sense to do this in the out of sample basis and not just take a look on the backtest. So I like this. I like the work that you've done. The results are promising. Especially what I like is that it's one more way how to look at seasonality. As I mentioned before, seasonality is something that is not discussed a lot. Maybe it's good for us, because if we are trading it, there are not a lot of the people who are doing it, so we have some extra edge and we can stack that edge. But I think that it will stay there, those seasonal edges.
It is not so easy for people.
Yeah.
They cannot automate trading. It is not so easy to trade seasonality on, let's say, more massive scale. Okay, you can pick a few patterns, but if you have to split the risk, there is a company risk behind, of course, like in stock trading. Then, for example,
you must be
if I
diversified.
can trade 20, 40 stocks at the same time, it is much better for my head than trade 3 stocks at the same time. Okay.
Yeah, and definitely it must be in the diversified portfolio and not on one selected asset or something like that. Thank you for being here. In case for all of the viewers who are listening or viewing this video, you are interested to learn more, you can check out the description of this video. There are all of the links and all of the information that we discussed and reviewed in the description. And I hope that you join me next in the future, whether it's with Michael or with some other guest here on our Quantpedia channel. And happy trading, everybody. Thank you very much. Thank you, Michael.
Yes.
Thanks.
Thank you. Thanks. Bye.
Are you interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.